Right, Robert, I have a question for you.
All right.
Rate hike is coming. Well, I guess I gave it away. Maybe rate hike or maybe not a rate hike is coming a few days from now. What seems to be the general consensus about whether we're going to see affordability continue to erode or will there be a pause?
Oh, what's the consensus? Well, I think we have an article in front of us that says that some of them say one thing and some of them say the other.
So I guess it's a bit of confusion. And on this episode of Real Estate Chat with
Robert Eade.
and John de Perez, we are going to read the tea leaves and tell you what's actually going to happen. So, post haste, Robert shared this with me. Economists read the tea leaves of Bank of Canada's July rate hike to decipher its next move. I guess tea leaves is the new way of figuring out what's going to happen next. So, September 6th, you're watching this probably during the long weekend. We hope you're enjoying the long weekend and not anticipating this a bit too much. But there's our Bank of Canada Governor, Macklem.
Tiffany. Please use his full name. Tiffany.
All right. I'm just reading what's on here. But Tiffany Macklem. So basically, it's divergent in terms of up, down, sideways. Economists are thinking, but basically, the post haste itself will link this in the show description. There is an actual number. Let me find it for you. I think it's 25%. They talk about jobless rate, employment, GDP, which we're going to touch upon. But here, where did it go? 25% chance. So there you go. We're quoting the article, not tea leaves. 25% chance of a rate hike in September, 60% chance of an increase by the end of the year. We're going to jump into GDP as well. So this is from June 2023 before we let Robert have at it. Basically, this was also released as of when we're shooting this is September 1. You'll probably be watching this a few days later. But June 2023 figures show a decrease in 0.2% in June. A couple of industry-specific figures that pertain to our channel. Construction activity falls, decreasing 0.6% in June. Meanwhile, real estate and rental and leasing growth continues by 0.3% in June. So we're now in August, September. Robert, what's your take? What do your tea leaves tell you after you sipped your tea this morning? Where are we going? How confident is the market?
Well, there's an old saying that if you put all of the economists head to toe, that they would point in 360 different directions. And it's also interesting that the editor of the Financial Post, when they put the little rider on the link that they're going to send around, I guess, after the fact of this particular article, which came out, yesterday? It now says, economists diverge on Bank of Canada interest rate decision. So the article itself is, it's interesting. They got one guy who's a fixed apologist and another guy who's a fixed Volcker mentality that it's going to go up, it's going to go up, it's going to go up. And the whole joke of this is that Tiffany, like R. Tiffany Macklem, is looking in the rearview mirror to try and figure out what he should do into the future. And that's a very dumb way to drive. And my prediction is that one day they're going to wake up and they're saying, we're never going to get to 1 to 3 averaging 2. And so what we're going to do is we're going to work on 4%. And that means that all the interest rates are going to be a little bit higher than they once were. But we're going to throw away this crazy idea of trying to break the back of the economy in order to solve a problem that seems to be waning. However, in the meantime, they got to write articles and the economists got to make predictions and they've got to use tired and out-of-date models in order to make those serious predictions based on anticipated facts and regular ways of thinking and right out of the textbook. So we only care about consumer confidence. And it says in here somewhere, the way they talk about that now, post-pandemic anticipation. Okay, I'm losing it right now, but the expectations of inflation are more important than inflation. Because when they're making a decision on the 6th of September, they're reading the few days before then, what does everybody think? So it doesn't matter what happened 2 months ago. The June DP, nobody's reading that and saying, oh, yeah, that's a very important, significant factor that happened 3 months ago that we already know. They're saying, what does everybody think is going to happen? And everybody thinks the rates are going to go up some more. And then they're going to go up a little bit more, and then they're going to quit, and then they're going to calm down. However, that's like 6 months from now. We go through a fall, we go into a winter, and then pause then. Okay, well, if they're going to break the back, they would have broken the back by then. And I surely hope that it isn't too much more than a wrenching. It won't be a real back breaking. It'll just be a wrenching. And there'll be enough evidence that maybe, first of all, they get rid of some of these stupid taxes for dumb reasons that are actually jacking up prices. Every single price has got a gas price, tax upon tax upon tax upon tax. It's jacking it up, increases my cost when I go driving, increases the shipper's cost when he goes try to deliver shippers, the grocery, goes all the way through. So that's not your question, but that's how I read this nonsense.
Well, we've got to look at the real estate chat viewers who have clicked subscribe and who've clicked like if they like what they see so far, so that they're always up to date in terms of what's happening in the real estate. We got to simplify this, Robert. So
simplify. Okay.
Simplify in the sense that their tea leaves are saying a little bit of a chance of a hike coming up in a few days, but more of a chance towards the end of the year. Our real estate chat viewers are either renting, they're looking to buy, they're looking to sell. And all of this is happening, mind you, ahead of next year's spring market, which who knows what's in store. And we'll have to watch your forecast and market update coming up. But basically, what do real estate chat viewers use this information for? The anticipation of whether or not a rate hike is going to happen is obviously going to affect affordability. Somebody who's looking to get into real estate or has real estate, was on the fence about listing, maybe they're going to list it now in the fall. How is this going to affect them, Robert?
Okay, simplify. You must expect that interest rates will increase between now and November. Whether our Tiffany does it right away or the next time around is immaterial. It's going to. Now, if you have a mortgage that's coming up for renewal right now, then you're fighting the same fight and thinking the same thoughts that everyone else is. Do I renew it for a variable again? Do I renew it 2 years, 3 years, or 5 years? Which one? And all the banks know that too. And they're bunching up the rate. They're putting a premium on the 2 and 3. Normally should be a quarter point, over 1 year, over 2 year, over 3 year, 4 year, 5, should be a quarter point. Now they're all bunched up together. So it's very difficult to say. So it's the sleep at night rule. How often do you want to think about this? Do you want to think about it every night? Do you want to worry that your payments are going to change so much? What are you going to do? So if you have to renew your mortgage, take it to the year.
And if you're looking at listing and selling your home, we're starting to see some shifts in dynamics. Like typically, Robert, we would start to see a pickup into the fall market by now. I mean, mind you, in the previous years, it was very quote unquote hot markets, or some people call it crazy markets. So what are you seeing right now in the market? Is there a lot of demand starting to pick up? Are listings starting to swell? What's going on?
Okay, right now we're at just the tail end of the CNE effect. The CNE period is the second slowest time in the whole year. The slowest time is between Christmas and New Year's. So we don't know anything except that there was a tremendous tail off in the second half of August, but that's normal. Looks like we're going to be just edging above 5,000 sales rather than 55 that we thought of even a week ago. So things tailed off. When the kids go back to school, everybody now decides what they're going to do next. There was a lot of listings that came through in Markham this morning. Now, Markham, they don't seem to care about holidays. They don't seem to care about anything. They just do what they want to do. And so there was some terminates, there was some relists. So there's more listings coming. There's more listings that have no fixed future date for offers. There's more listings coming that do. But there's not thousands of them. There's a lot of vacant houses. So it's a time to look hard and offer ugly. And if you're selling, it's time to make your house look as good as possible. Get a pre-inspection report done. Prepare it for welcome arms of anybody who comes in the first week, because they may know more about the market than you do. Decide in your head what you would love to get, what you would grudgingly accept, and what you won't accept. And that's your range. Make sure your listing price reflects that. And it's going to be a regular fall. We're going to have a rally. just like we'd had in, not like in the spring, but we've got 30% off a normal market. And for the last 5 or 10 years, it's been really a hot market, not so much normal, but it's going to be there. There are going to be buyers. There are going to be sellers. It's going to be, you don't have to make your mind up in 2 minutes. You have to make up your mind in 10 minutes. So it's still fast paced for the good houses. On the garbage houses, oh, there's unlimited amount of time. But on the good houses, on the good street, at a good price, in good condition, you got to decide right now.
Well, there you go. Get ready for the fall market. Get ready for the rate hikes coming. Thank you so much for watching this episode of Real Estate Chat. We'll see you in our next episode. Take care and bye for now.
See you later.